We saw quite the substantial sell-off today after FOMC. You can see here we did break down from this ascending pattern that SPX was within all the way since March 13th from back here. So we had a fake breakout above it, was unable to even get back into this purple box. This is a key supply zone. It was not even able to touch up there. It got rejected very hard, and this made it a fake breakout that we had. And you guys know whenever there's a fake breakout, it means that there's a lot more, in this case, weakness to the downside, and we did break further below this ascending pattern, and now we're really close to this demand zone again. This demand zone is key because if we do break below this, which is my expectation, then we will see a lot more downside and likely test the lows that we've made so far around this 3,812 level. So do note this box going forward is going to be especially crucial as we test it likely tomorrow and then Friday. So my bias is that we continue down further, and this is working perfectly so far. If you guys watched the video on Sunday, which if you're new here, do subscribe below. You can see I mentioned I'd like to see the up/chop price action into FOMC with a sell-off after. That is exactly what we've had so far, and right now I'd like to see continuation of this sell-off. Maybe it wants to retest, have like slight retracements, but regardless, as of now, momentum is to the downside, and we likely will see another retest of this lower end of the level. And then ideally after that, there's going to be some minor supports along the way, but ideally after that, we do go even lower than this support around this 3,810-ish level that we made a moderate bottom at. So that's my thoughts as of now. Another key thing to note up here, if you go to the SPX chart, this one, a lot of things going on here, but we have three ascending patterns, as you can see in the yellow, the first one over here, second one, and then the third one. And then also I have a Fibonacci overlay, and you can see here we had a very nice rejection off of the 0.382 retracement. You can drag this Fibonacci tool from the high that we had, the all-time high that is on SPX, all the way to the current low that we've made, which by the way, my bias is still that we will make a lower low this year. As crazy as that may sound to you guys, I actually did a tweet. It was pretty funny. I did some tweets lately just to play around on my Twitter, and I said over here we had on February 14th, we were at 4,156. I said there will be a price below 3,500 by the end of the summer at the latest, likely going to be a little bit sooner, before the end of summer, likely by around June, but still just to give a little bit more time into that. And then see you then. We went down all the way to around here. That was all the way by there, back here, by the way. Went down all the way back to around this retest of that trend line. Remember, I was talking about there being a possible bounce for about a 1 to 2 weeks or so off of this level, plus we were oversold, and this was when the bank fiasco was happening, so a lot of people were scared and thought we'd go lower. I said there would be a final hopium bounce for the bulls, said this at 3,879, and then we did end up having that hopium bounce. I also said wait for the bulls to appear, that will be your sign. And then I said, are those bulls that you see? So just messing around on Twitter, but these are the 4 tweets that I've done since I did tweet this original one back here for my sell signal, and we did have a sell-off after the bulls did appear again because people were getting very hopeful and bullish yet again as we continued up higher, even though I did warn at least all of my followers about this, and I warned you guys here that are subscribed to the channel about this potential relief rally that we'd see. And as of now, my bias is to more downside, regardless if there are some bounces along the way. Still, my bias is to the downside. And you can see from up here, we did have a very hard rejection from this 0.382 retracement. We did touch it today and also yesterday, and a pretty substantial rejection outside of this ascending pattern, which has been the case all 3 times so far that we've had this pattern. So it's a common occurrence to see these types of patterns. And also something similar I want to go back to is all the way back here when we had this major downward trend in August. If you remember my big short position that I took here on August 11th, and I expected new lows to be met, which was the case back then, and that's kind of a similar case in this scenario here. But also you can see that we did have a nice rally, 4-day rally, pretty substantial one too, before selling off after Jackson Hole, I believe it was, around this day for September 13th. I know that there was an event that day, I'm pretty sure it was Jackson Hole, but regardless, we did have a very large sell-off after this nice relief rally. It's pretty similar what we saw right here in terms of this overall structure. We did see a small relief rally over here on this March 2nd to March 3rd-ish range. We did have that minor bounce, kind of actually similar to this over here around August 24th and 25th. And then we went lower over here, made a intermediate bottom, continued a bit higher, which is kind of similar to what we saw from back here. And after that, we had an event, in this case FOMC, and in that case, pretty sure it was Jackson Hole, and then continued lower after that. And that is my expectation here as well. Key levels to note going forward is around this 3,800-ish range, because that is a retest of the downward trend line. So this will act as a support again, although I expect it to be a lot less pronounced of a support, because this would be the second major time that we did touch it off a retest once that does happen here in the future. So it shouldn't provide as large of a bounce, at least as it did the first time. So just keep that in mind. Another thing I do want to mention here in terms of the flow, you can see that we've had a lot of put flow and it's been really ticking up lately. And I'll actually go to the historical flow tab, one of my favorite tools on Cheddar Flow. Just go to the start of the week here for SPY and then filter for over 1 million in premium. Don't pay attention to these super deep in the money prints. These are more so of an arbitrage trade strategy just based on interest rates. But as you scroll down here, you can see we had these 379 strikes for the 1 million in premium and also 2 million in premium for the 4/21 expiration and 5/19 expiration. This is pretty substantial. These are far out the money with not that much time in terms of expiration, literally just a month to 2 months on these, and both of these were above the ask since they are highlighted. And just scrolling down, you can see consistent out the money prints with a lot of premium. 5.7 million, again 379 seems to be the strike of choice as of lately. 5/19 expiration, 1.1 million, 390, 5/19 expiration. You can see all the way down across the board, we've seen a lot of these occasional calls, but most of the calls are pretty short in terms of expiration. And the real kicker is if you look at QQQ, this has been getting hammered by puts lately. You can just see like some of these block orders, like the 295 strike, 270 strike. These are a little bit further in terms of expiration, with more of an emphasis on very short-term expiration being calls. This was a couple days ago, by the way. This was Monday. But as you go up, you can see pretty consistent in terms of puts, 616, 421. These are all out the money with a lot of premium backing them. So this has been the consistent case with not only tech, but also SPY, which just adds to the overall bearish bias in the market so far. And then also just an update on the dark pool levels, because I know you guys like that. You can see here the 1.5 billion in premium for the 398.77 level. Not too crazy, but also did mark the high of day that we had. So then it continued down off of it, just as you can see from this graphic here. So 1.5 billion, again, nothing too crazy, but it still is over a billion, so definitely is notable. Going back to yesterday, 3.6 billion at the 393.63 level. We did break below that near the end of the day, so it's going to be interesting to see if we do open below that tomorrow, especially because that could mean more of a bearish bias going forward as well. So this is a substantial level, 3.6 billion. Pretty rare you see over 3 billion. So mark this level, 393.63, especially if we close the week below it. That can lead to some more sell pressure going into next week, which would be my bias. But that's for yesterday. And then also on Monday here, you can see we had 2.1 billion in premium at the 390.12 level. So that has yet to be tested after this sell-off from today. Likely to be tested here in the next couple days. So we'll see how price fares once it does test that. But those are the last 3 days in terms of dark pool premium. And another thing I do want to mention here in this video is the VIX. This is going to be very key here because we did see that initial sell-off, but today was VIXpiration. Typically, we don't see a high close leading into VIXpiration. I mentioned this in the last video on Sunday, and this was the case. We saw a compression of volatility leading into VIXpiration, which was today, AM, that is. So a lot of those March expiration contracts, which there tends to be a lot more of those VIX calls for the month of March, just because seasonality wise, it's typically a bearish month. So a lot of that protection rolled off this morning because these did expire in the AM session. And we did see a bounce as a result of FOMC, as well as the fact that it was VIXpiration today. So volatility did bounce. But again, we saw that compression the last 2 days because typically, or at least it's not in the market maker's best interest to have the VIX close at a heightened level unless it was near that level at the opening, or at least around 1 to 2 weeks prior to that VIXpiration date. So that was the case here. So very interested to see if we have a bounce off of this. So I'd like to see at least leading into next week, at least for volatility, because we did see that compression as expected. And now I'd like to see that bounce coming off of that VIXpiration event, because now a lot of those options have expired. So that can give it some more leeway to run. And then one last thing I'd like to mention today in the video is DXY. DXY actually sold off off a decent amount today despite the sell-off in equities. I'd like to see this get picked up because I would like to see the dollar have a pickup for this next sell-off that I'm expecting in terms of the S&P 500. Dollar strength can lead to a lot more weakness in the overall market, especially for the Dow, but then also SPX. So it's going to be essential to get help from the dollar, at least getting a pickup on the dollar for this next sell-off. So I am watching the dollar. I'd like to see this continuously pick up. Not the best of candles today, but do watch this, especially in the next couple of days, if it does have some form of a pickup going forward, because that would be definitely ideal for some more downside in the overall market. Regardless, I'm looking for some more downside into next week, like I said earlier. And other than that, though, I'll see you guys on Sunday for the next video.